welcome to the TMT Stock Market Strategy video for Friday, December 2nd. All right, guys, rates keep rising here, and it's non-stop. It's pretty amazing stuff here. We did talk about generational lows being made in July. That's definitely putting a pressure on stocks. There's going to be definitely yield alternatives here going into 2017. It's not all about stocks, and especially when stocks are fully valued here. All right, no discount buying stocks at these levels. There's going to be other alternatives to put money to work, and I definitely agree with that concept. That's for sure. All right, so you have rates rising, definitely putting a pressure on equities, and I see a lot of the pundits when they say, "Oh, well, the bonds are down so big, money's flowing into equities." That's not necessarily true. Okay, it's not necessarily true. There may be a portion of money going into bonds. Flowing into equities. But most of all, there'll be other alternatives to put money to work instead of a fully valued market here in the United States. So that is not 100% true, guys. So just make sure you understand that. As far as rates are concerned, we talked about rates making a generational low. I do think at one time you want to look to, if you are that type of trader, maybe looking for a bottom in bonds for I'd say, just for a retracement rally, that rubber band trade, if you will, and then look for a re-entry in a short position in bonds. I'll show you a weekly chart of the bonds. Here is the USB. Now, this here in particular is, you could see that this has been in a bull market for about 25 years, okay? This goes way back below 1997, and you could see that we've held this huge channel. We've now broken down. We broke out, and then we broke back down again. And now we're sitting on the 200-week moving average, which is at 148.51. I think that's where you're going to have a little bit of support. Usually your first initial test back on the 200-week. You could see here we rally, and then you get back, and then that failed, and then we broke back above it again. So you could just see if you followed it and pause the video. So I see the first bounce should get us right back to 155, and I think that's going to create another good opportunity to short bonds going into 2017. Next is going to be the VIX. I want to show you the complacency level here. Remember, we mentioned it. We talked about it on Friday. We talked about it all week this week about how the AAI numbers came out extremely bullish, 49.5%, 50%, I think it was, in most in the last couple of years. VIX here at 12. You have washout levels here going at stocks above the 50-day moving average. So it's just a matter of a shock event to happen in the equity markets before the markets start to roll over. Okay, now we are coming into also another notorious time of year when you have tax selling period. Now today is non-farm payroll numbers, so you have to be careful. So I think the number, whether it be good or bad, up and or down, I think you have to discount what happens today, and then you look at going into next week. But next week we get some tax selling. Money's definitely flowing out of the so-called FANG stocks, either the Apples, the Amazons, the Googles. You got to be careful with stocks like that. Facebook, their money's coming out of technology, and that's not a good sign either going into 2017. Because if technology is not participating in the rally, what else is going to support the rally? And you really need the banks, financials, technology to sustain any type of big rally. Okay, so just wanted you to make note of that. Now, gold is getting very interesting, and you could see here on the MACD stochastics RSI. We're getting really, really oversold. Now, is that a buy signal? No, of course not. However, we are getting into this area here. We actually closed below it. Now, we're trading above it in the pre-market. We're actually right at it now. We were at 169, and we're at 173 now. So we're back right at the line on 61.8% retracement. Remember, if this doesn't hold, and non-farm payrolls will affect gold. If gold washes down into like 1140, 1150 area, for a trade, and if you're quick enough to do so, I think you might get a shot at it, okay, in gold. And I think gold at one point in time will turn around and will shine. That metal will shine again in 2017, no doubt about it. Same thing with GDX. I'm still looking for a breakdown to 61.8% trade. I'm looking for one more push lower, guys, in gold in general, and that'll give us the GDX trade as well. Here's GLD. Remember, we lost that area here. Remember, once we gap down below a big area of support, generally we'll continue, okay? That's just a quick little technical tip. Once it breaks lower, it usually goes lower. And sure enough, now we're into this thin zone area here. So again, 107, 108 GLD is what I'm looking to buy this thing. Spiders, going to the indexes, you can see here, we're starting to roll over. Again, guys, 1 or 2 days is nothing, but it's refreshing to see a little bit of selling come in. But if you look at this, we're just continually just running right up. So first area is going to be that 20, 117, 217, and then I'm looking for the 50-day area here. And I have in my other charts, which I don't have here today, which I posted yesterday. Those valid support areas are still valid for today's trade. 60-minute, you can see here, we fill that one gap, or this small little gap, and now we're at the top of the other gap area here. So this area and then this gap area here is going to come in play for today at 218.75, okay? And then we'll go and reevaluate for next week's trade. IWM, still looking for that area here to pull back to about 126, 127 area. There is a small gap here, which coincides nicely with the 20-day moving average of 128.72, just to keep that in mind. But remember, guys, again, a big move like that, it's not going to continually go up. And I keep saying that in all the videos, and it's sad because I hear all of the pundits and I hear everybody on the internet, all of these retail crowds, you got to keep buying IWM. I think IWM, Russell 2000, by the way, is going to be a great long trade in 2017. There's no question about it that Trump is going to be good pro-business. So that's going to help the small caps. Not a question. But not here. Not at these levels straight up. Now, if we got up here, sidestepping, stair-stepping, excuse me, within a matter of 5 months, 4 months, yeah, it's not a problem. You build in bases. Here it's straight up for 2 weeks, 14.5%. So I'm looking for lower prices in IWM. I'm looking for a higher low. If we take out this low before the election, then the IWM is in real big trouble. I think the Russell's in trouble. Then I think the overall market will be in trouble. But I don't think that's going to happen at this time. Qs and last set, you can see here money rotating out of technology. And that's something that you want to take a look at. So if you're looking to short something, look at the NASDAQ. I think the NASDAQ is coming up with some great names to look to short. NVIDIA, which had a real great run, that's looking really tired. Take profits. You got Facebook looking the same way. Apple having issues that's slowing demand in the iPhone. And like we talked about this all of 2016, I think Apple is a great short on any spike rallies. I think they're not innovating any new products. It's just the same old thing. Bigger iPad, better phone. So Apple to me is a great short candidate. Apple gets attractive around 97, 98 because that's the cash value of the stock of what they're holding. So just keep that in mind. Have a great day, everybody. We'll see you on Monday.